Chart of accounts is an organized listing of all the accounts that a company uses to record its transactions. As mentioned before, accounts provide a way to categorize and organize business activity based on the transaction type. As the entries are posted to these accounts throughout the accounting period, the accounts are used to accumulate amounts from business transactions. This, in turn, will allow us to present totals for these accounts on different financial statements. All of this will become more clear when we go through actual examples and illustrate the process later in the video. It's important to note that the accounts on the chart of accounts are organized by type. It is critical to get to know and understand these types. The types are assets, liabilities, owner's equity, revenues, cost of goods sold, and expenses. Let's provide an explanation on each account type. Assets are resources that a business owns. Some examples of assets are funds in the bank account of the company, accounts receivable, inventory, and buildings and machinery. Liabilities are present obligations of a business to make payments on loans, transfer assets, or provide services. Some examples of liabilities are accounts payable, loans payable, and accrued expenses. Owner's equity represents claims by owners of the company to the assets of the company after deducting the liabilities. In other words, the owners of the company usually don't have claim to all the assets. If the company has liabilities, debt on its books, the debt holders usually have priority over owners to the assets of the company. As such, equity measures the residual interest of the owners in the assets of the company. Equity increases from net income and investments by owners into the company. Equity decreases from net loss and distributions to the owners of the company. Revenues are income from conducting business operations. And then we have cost of goods sold. It's important to distinguish the cost of goods sold account from expenses. Cost of goods sold is the cost of your product. When a merchandising company purchases a product to sell, they will first code it to the inventory account on their books. Later on, when this product is sold, an entry is used to transfer the associated amount to cost of goods sold account. Expenses are outflows incurred as a result of conducting business operations. To keep things organized and make it easier to work with the accounts, they will usually be numbered on the chart of accounts. The accounts are numbered according to their type. While each account on the chart of accounts will be assigned a unique number, all accounts that belong to a specific type will begin with the same number. This makes it much easier to organize them by account type. For example, for the asset type accounts, the first asset account will be assigned the number of 100. The second asset account will assign 101, and so on. While this is not in stone, typically the accounts are numbered as follows. Assets will start with number 1. Liabilities will start with 2. Owner's equity will start with 3. Revenues, or income, will start with 4. Cost of goods sold will start with 5. And expenses will start with number 6. Make sure to note that in order to perform the accounting function efficiently, it's very important to have an organized chart of accounts.